late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today we're going to jump into the charts. We want to take a look at some of the positions we're currently in. We did have some bullish news, or kind of more bullish news than what we've been getting recently. We've basically seen that the US and China have come to a temporary negotiation for the tariffs. Essentially, China has lowered the US tariffs to 10%, and the US has lowered the Chinese tariffs to 30%. So we've also had that 90-day pause on the larger tariffs. Initially, they were targeting above 110. We're looking at like 120 to 150% tariffs at the worst kind of thing. So we're seeing the stock market react very positively here. There are some mixed signals in the market, which is a little interesting. So we're going to just jump into the charts, take a look at everything going on, and see what we can kind of gauge in the market. So what we have here, flip to our macro thing side of list here. Sorry about that. We just see the SPY currently. So I've got the chart overlaid with all our typical indicators here. So looking at the RSI and the MACD, as well as the Vortex and the Directional Movement Index here. So first thing, before we get into the SPY, we do see kind of mixed performance here across markets. We see volatility down. We see the dollar is up 1.5%, kind of bouncing almost from this trend line here. So holding as support. But it is in that downtrending price action. So if we do get rejected here, expect there to be a little bit more relief in some of the risk on assets. Generally speaking, when the dollar is in a downtrend, we start to see money flowing back into some assets, giving the stock market that bit of relief. We see the US 10-year, it's still holding on here, guys. So we're pretty much exactly where we were before, getting a little pump up. So it's interesting to see the dollar up, the 10-year up, and stocks up all together. It's kind of an interesting mix of performance there. So still elevated 10-year, that's not ideal. Market participants still could be worried that there's more volatility. Obviously, there's no final deal between China and the US right now. This is just a kind of wait and see type news, in my opinion. It's better than the alternative. At least we're not looking at 150% tariffs for the next few months while they negotiate. But that being said, we've also seen Besant today said there was kind of an unexpected escalation from China as well. So we don't have all the details. We need to just follow the charts. That's all the information we have. Unfortunately, we don't have the same insider information as some of these more well-connected, more well-capitalized investors, insiders. So we're just looking at the charts here. We're on the flip back to the SPY on the weekly. And so I want to just break down our momentum indicators here. First thing that I want to talk about is the RSI and the MACD. So similar to these prior corrections here, we came back to oversold levels. We kind of came a little bit more oversold than 2022, but not quite as oversold as the COVID drop over here. But that is that oversold territory. Same thing on the the MACD down here. We got a nice bounce. I know we're probably up, let's see here, from the lows to the current price, we're up about 19%. We're still not at the all-time highs yet, so a lot of people are claiming victory already for the US. I think that's the wrong take. Basically, for them to come to this resolution with China, they had to seriously backpedal on their demands. So we've kind of seen the US administration backing off on their initial demands. As we talked about, they don't have the leverage on a macroeconomic front that they think they do. So that's kind of what we've seen. They've had to back off, lower the demands, actually negotiating with China. So we'll continue to follow along. But we see coming from that more oversold territory, as we did over here. The one thing to note, we had a double bottom in 2022. So despite the fact we came to this oversold territory and started to break back above, we didn't actually confirm that trend reversal. We still put in a lower low. So there is the potential for that to happen again. Or we could potentially also see something play out like COVID here. If we get more bullish news, if we start to get more dovish rhetoric from the Fed, and we start to see the potential for a rate cut to come back into the mix, then we could see a more sustained rally here. But we are at resistance. That's important to note, but we'll get into that when we kind of break down the low time frame price action a little bit closer. We had a nice little increase in buy volume down here, but we want to continue to see it follow through. We're holding well above our VRVP point of control. When we look at the vortex indicator, I've pointed this out before, so I just want to highlight, we have the blue line and we have our red line. When the blue line is dominantly on top, that means we are in a technical uptrend, and when the red line is dominantly on top, that means we're in that technical downtrend. So you can see this little period here, we had that COVID drop. Over here we had that kind of more sustained downwards price action, you know, kind of really having to put in the work, print those higher highs, higher low structure before we were able to go on the next leg up. And then we saw it right here confirming that uptrend beginning, little downtrend in here, and again the dominant uptrend right here. So what we see right now, the two lines converging towards each other, we could see the potential where in kind of excuse me, in this scenario where we see the orange line bouncing off the blue line and maintaining that bearish momentum. So what happens here when these two lines converge, we really need to pay attention. If the red line bounces and holds above, that's that signal that the bearish trend is likely to continue from there, especially if we're not able to take out these highs up here. So that's one thing to keep in mind. We're just watching this right now. We don't have confirmation yet. If something like this plays out where we broke above and then we come back, we back test it, and then ultimately hold it again, then that again, like I said, bearish price action. Also looking at the DMI here, it's kind of a similar setup, but you can see we have had our bearish cross, or the bearish cross of these two moving averages here. So bearish trend with the orange DMI negative line on top, and that ADX line was above 25, signaling a strong trend. So right now we're kind of curling over. It could curl back up again though and maintain that trend, so we need to continue following this. The ideal thing for our risk on assets, for our actual positions, is if these two lines continue to converge towards each other. That means the bearish momentum is slowing down, the bullish momentum is starting to pick up, and the trend could be shifting in the near future. This is on the weekly chart, so this could take weeks to months to play out. So we're going to flip to the lower time frame, see what looks like the potential here on the 4 hour. So if we look at the 4 hour, take a look at our indicators here. They're looking a little bit more bullish, so I'll show you. We'll just kind of stretch this out, make it look a little bit cleaner. But what we see here, we've got RSI, bullish cross, but getting to those oversold territories. That being said, the MACD just had that bullish cross again, so we can sustain a bit more of a move up here. Same thing, vortex, blue line dominant on top here on the low time frame, diverging away from each other, which means that that bullish momentum is likely to be favored or continue to be favored in the near term. We're seeing the red ADX line on the DMI here really start to break above. So if we see that confirm, the red breaking above and really picking up speed, as I said, if we get above 25, right now we're at 18.5, 25 and higher for this ADX line signals a strong trend momentum. So we've got that blue line on top, and if we see this orange line break beneath and we see the red line start to curl up, then we've got a dominant uptrend here based on the vortex indicator, and also a dominant and bullish trend here based on the DMI and its ADX line here. So pay attention to that ADX line. Just like over here, this signals, look at that. So when this comes up, starts ramping up, that tells me that the trend is getting stronger, and when that orange line is on top and that trend is up, that's a bearish downtrend. That's what we saw, and now we want to see the opposite for that reversal. We want to see the blue line on top above the ADX line, which is pushing it up, and that orange DMI minus line staying low, keeping the bearish pressure out of the market. Let's take a look at price action here. So we see, we are in a fair value gap channel, so this is a Lux Algo indicator. We can pretty much see from from the highs here, we were able to kind of break out of our downtrend. We've got the uptrending price action on the daily that continues to be held. So it's looking really good here in terms of price action. We are coming into a bit of resistance. Let's take a look at some of our indicators. So we've got our order blocks here. We can see there's a little order block right down here around 550 that also coincides with this kind of area of pivot high resistance as well as the breakout. So right through here, this was a pivot high. You can see we kind of got rejected here and then rejected here as well. Ultimately, we were able to break out, retest it. It is now a pivot low, so we could come back to retest this area here, but we're maintaining our uptrending price action for now. We're above our VRVP point of control on the low time frame, so we're looking really good. That being said, we are kind of coming into a bit of resistance up here. We've got the upper bounds of the fair value gap channel. Let's take a look at our Fibonacci resistance here. So we'll take a fib retracement, pull it from the high to the low, and let's see where we end up. So we're coming right into that 786. That is typical resistance, so pay attention here. Look to enter on the continued higher lows. That's generally what we want to see when we want to enter. We don't want to buy into resistance after things have moved. We want the higher lows before we really get involved. We take a look at our momentum indicators, our moving averages, to help gauge trend. We're above the 50-day and the 200-day, so really good there. Let's get rid of the fair value gap channel to clean this up, and let's get rid of our Fibonacci here. So we see we're above the 50-day, we're above the 200-day. We've got our 8 and 21-day moving averages stacked and curled up. We're starting to see the 50-day. It looks like it's hopefully flattening. We've got a flat 200-day. So ideally, we want to see these 50-day and 200-day moving averages start to curl up, and that's going to signal to me that the uptrending momentum is being favored. So if we start to see that 50-day curling up, same thing with this 200-day, eventually what we want to see is the bullish cross of these two moving averages to signal that, basically confirmed on the high time frame, continuation uptrend. So watching for something like this. If we start to see the 200-day curling, I'll clean this up a little bit for you. We start to see the 200-day curling back down. Same thing with the 50-day. That's that bearish signal that this might have just been a kind of lower high macro bounce, and it might be due for more consolidation, kind of similar to the 2022 correction as opposed to the COVID correction. But for now, we're holding above here. As long as we hold above kind of this 560, we can maintain our uptrending price action on the low time frame. And then if we flip to the daily, we are also confirmed on the daily uptrending price action. So we look good on the daily. Wait for that higher low, potential retest of that 50-day moving average and VRVP. Then we could get another swing position in here with a stop loss below support. Otherwise, we could also just bleed back down to this area that I've marked here. I'll show you why. So when we look at the weekly chart, we've got one higher low, a higher high, higher low, and a higher high. So if we confirm another higher low on the weekly chart, that's technical uptrend price action on the weekly, so we should pay attention to that. But when we pull our Fibonacci retracement zone, we do from this swing low to the current high. This is our 618 to 786 zone right in here, and we would also be back testing kind of this downtrend breakout. So interesting to note, high time frame, better value accumulation area down here below 500 and kind of closer to 535. Otherwise, look for the higher low time frame swing entry to supplement our positions. I just want to flip over here. So what we see is just a general amount of kind of different trades and assets that we've bought into during this choppy price action during the dip. So I wanted to show here, pretty much we've got a bunch of different swing trades. Total return on this was 115%. I generally trade these on 10x leverage, so you're looking at 1155% if you're using leverage. But even if you weren't, an unleveraged move of 115% in the last couple months is really impressive. Like even Bitcoin has moved about 40% off its lows. So we've more than almost triple outperformed the performance of Bitcoin, and we've realized these profits. These aren't unrealized profits. These swing trades have been booked. The only two we have open right now are Ondo and AIOZ. We have stop losses trailing up in profit. So worst case, price drops a little bit, hits our stop loss, and we're out with a 13% unleveraged move on Ondo. And AIOZ, if we hit our 50-cent stop loss, we're out with almost a 30% realized gain on AIOZ. So it's really important to, we want to kind of combine different strategies. We don't want to be focused on one single asset class. You know, there's opportunities everywhere. If we kind of just had blinders on, we may have missed some swing trades, and then we take our swing trades and we use that capital to buy other assets. Then we get over to our stock trades, which are also looking really good here. We've got CoreWeave up 51%. We've got MicroStrategy up 41%. BABA up 32%. The stock SPY here up 20%. So we pretty much nailed the bottom with our SPY and QQQ buys. You know, our Nvidia buys are up nicely as well. Sorry about that. We'll just get rid of that. But yeah, Nvidia up 21%, Palantir up 25%, MP down 14%. That's okay because we're 89% of these positions are in profit, and the average return is 23%. So same thing up here. All of these altcoins essentially went into the red. We got in a little bit too prematurely. That was my mistake. You know, I didn't follow my strategy. I let emotion kind of take hold a little bit too early. I got too aggressive, tried to play a little bit of news, try to play into a catalyst. It bit me in the butt, and ultimately we had to hold these. But look, because of the conviction, because we focused on strong assets, you know, most of these are back in the green, and things like Tau up almost 40%. We've got Virtual up 45% with a realized 23% returns. So our previous trade in Virtual booked 23% in our spot bag, booked those profits, reinvested those profits back at $1.37, and those buys are now up 45%. We've also got CAS here up 50%. We've got Fetch up 30%. So, you know, overall, we're majoritively in profit. Average return right now about 8%, some doing much better than others. Keep in mind, here, this was a rug pull. Unfortunately, we got caught in it. Yeah, not much to say about it. It does happen. It's part of the game. So even factoring in, you know, this huge loss here, this 95% loss in this position, we're still overall in profit. So that's the power of diversifying. So that's what I just kind of wanted to touch on. We're going to look at some of our assets that are in more profit and look where it might make sense to put some stop losses. So I'm going to take a look at MicroStrategy, BABA here, and CoreWeave. Because they're outperforming a bit more, we're going to see if there's some places that we can put a stop loss that might make technical sense, just to protect those positions, protect those profits. So what I see here on CoreWeave, we basically came down. If this channel broke out, we bounced above here. We're riding up this trend line right now. Where I would have a stop loss is below this support here. So I talk about uptrending price action. We need to maintain this uptrending price action for continuation, in my opinion. So for me personally, I have a stop loss currently at $48.50. I'm thinking about raising it a little bit. I do like having it just underneath this buy order block here, and that's going to protect 25% returns. So even if we come back here and I lose that structure that I was riding to the upside, you know, I'm okay. I don't mind. We took the risk. It's now a risk-free trade, and we're guaranteed 25% profit. If we come back here and our stop loss is hit, we've broken that structure, and we're going to look for the higher low on the higher time frame to re-enter that position. So CoreWeave, you're looking at about a $48 up to $50 stop loss for that position. We're going to flip over to MicroStrategy. They're one that's up 42% for us as well. Sorry, not MSTY, MSTR is what we're looking for. Same thing here. We want our stop loss below support For me, you know, 370 to 375 is a good stop loss. We entered at 290, so that's going to preserve a decent amount of returns here. So stop loss here, let's just put this in now. Stop loss at 370. For CoreWeave, I'm going to put my stop loss at, we'll put it here at 49, just up a little bit. Let's take a look at BABA, see what makes technical sense for that stop loss. Moving over to our stocks somewhere here. There they are. Let's take a look. We've got BABA right here. So BABA's up 6% today. Same thing, you know, we're looking at about 120 to 122 for that stop loss for BABA. That's a 22% return if we hit it. So, you know, you don't really want to round trip all of these back down to the entry. We want to book profits when we have it, you know, so kind of strategically putting stop losses in some of the larger outperformers, because generally speaking, when something moves a lot faster to the upside, it also kind of can move that quickly to the downside as well. So we need to protect these positions that are in substantial profits. We don't want to round trip, and then we can look worst case scenario, we book 25 instead of 40% profits. It's not the end of the day. Nobody ever went broke taking profits, so don't feel like, don't kick yourself because you took profits and the price went up a little bit, or you didn't take profits and the price came down, hit your stop loss, and then that's how it took you out of the position. It doesn't matter at the end of the day, as long as we're profitable, as long as we're consistently compounding these returns, that's gonna be what makes us successful in the grand scheme of things. So we're gonna take a look at Ondo and AIOZ here as well, because they're currently open here. So taking a look to just show you how I put my stop losses. So Ondo, AIOZ, let's find those here. We've got Ondo here at $1.02. So if we break below $1, you know, that's that technical downtrend. So we did, you know, we have here, this is almost a head and shoulders pattern as well, so we need to be aware of that. But we did have a technical lower, I'm sorry, we're holding the lows for now. As long as we can hold above $1, you know, I think we can maintain this trend. So worst case scenario, I get stopped out of Ondo at $1 and we only make like, oh, sorry, what was it? You know, 13% on that one. Unleveraged, 130% on leverage. So looking there, you know, that's why I have it at $1. Risk-free trade. If we hit our stop loss, we make 13%. And then AIOZ, similar thoughts. We just go to the chart. We take a look. Where is the technical support here? And we're looking at about 50 cents, just under 50 cents, right under here. So same thing. If we hit that, you know, we're going to just take it out, book those wins, and look to put that capital into these positions over here on a dip. So pay attention to that. We're going to take a quick look at Virtual. We'll look at Caspa, and we'll look at Tau as well. See if we can find good places to put stop losses. So Tau, you know, Tau under here, 432 is going to be the stop loss. So I'm just updating this for you guys. You do have access to this document if you kind of are in my Telegram, or you go to the Google Drive that's linked in the description of this video. You can have access to all of this. So stop loss here, 430. Let's take a look at Virtual, see where we want our stop loss for this one. Where we see this, we've got obvious support here. We're going to have it, you know, around $1.83. That might be a good level here for a stop loss for Virtual, $1.83. Let's take a look at Caspa really quick. I don't even know if I have it on here. CAS USD, take a look. So here, Caspa, you can put a stop loss at 11.05 cents, and that's going to protect that position. So 11.05, and we're still looking pretty good for profits. So yeah, really just kind of as stuff climbs into more and more profits, look to strategically trail those stop losses up. We want to protect as much gains as possible without kind of round tripping these bags. So we need to find that happy medium. You know, there's still uncertainty in the markets. We're still not technically confirmed uptrending on the high time frame. We're stuck under some key resistance levels when it comes to trad markets like the SPY and the NASDAQ. So again, I'm still patient, but I'm selectively taking really strong setups. I'm looking at swing trades, I'm looking at altcoins, I'm looking at Bitcoin, I'm looking at stocks, I'm looking at indices. I'm not kind of wearing blinders and losing focus here, but we do recognize there's lots of opportunities. We want to identify the strongest movers, we want to find them early, and we want to position ourselves in swing positions. And then when we get that confirmation to start adding to the spot side of things, we can really look at building those positions up and then capitalizing on a hopeful and continued macro uptrend. So thank you so much for watching, guys, and I'll see you in the next one.